Now, let's complete the statement of financial position for 2024 October paper 1, question 1. You should be familiar with the format of a statement of financial position. Let's give a heading. Statement of financial position. At 30th September 2021. First category is the non-current asset, followed by the current assets. Then you find total assets, capital and liabilities, non-current liabilities, current liabilities. Do remember this format. Now, let's go to the question and find out the types of non-current assets. As you can see here, we have 3 non-current assets: premises, equipment, office computers and fixtures, and there are no additions or disposal to these non-current assets. So let's enter these amounts: premises, equipment, office fixtures. And the cost: 600,000, 100,000, 120,000. And the total of this is 820,000. Now we have to find the total depreciation, which we call it accumulated depreciation, for all these 3 non-current assets. Now, how do we do that? So we find out for premises, we have opening 400,000, plus we calculated 15,000 for the current year. So if we add up these two together, we get 415,000. And then for equipment, you can see there's 65,000 opening balance depreciation and current year 20,000. It should be 85,000. Then for office fixtures and fittings, computers and fixtures, you have 55,000 opening, and the closing we calculated earlier, which was 13,000. Therefore, accumulated depreciation for office fixtures, 68,000. Now let's add up these 3 figures and you should get 568,000. Now, find the difference between each one of the element cost and accumulated depreciation. 600,000 take away 415,000 should give 185,000. 100,000 take away 85,000 is 15,000. 120,000 take away 68,000 is 52,000. Now let's total the carrying value, which should be equal to 252,000. Now we are done with the first section, non-current assets. Now let's complete the current asset section. Going back to the question, let's identify all the current assets. As per the question, we have cash or bank, which says a debit balance should be a current asset. Trade receivable should be a current asset. And there is a prepaid expense, which should be a current asset. So this should go under other receivables. And you have allowance for irrecoverable debt. Earlier it was 2,500. Now it reduced by 400. So 2,500 take away 400 should be 2,100 at the end of the financial year. This also will go under current assets. So let's enter based on the liquidity. So you have trade receivables first. Let's enter trade receivables. No closing inventory because it's a service business. Trade receivables 38,100. Then less allowance for irrecoverable debt. which is this 2,100. $38,100 take away 2,100 should be 36,000. Now other receivables. So you have this commission receivable owing as well goes under other receivables under current assets. So it's 300 plus 800. Equal to 1,100. Cash in bank. It's here cash in bank is 7,980. Now these are the information that comes under current assets. Now let's add up these three figures, which should give 45,080. Now let's add 252,000 and 45,080, which should be equal to 297,080. This should be your total assets figure. Now we are done with the first half of the statement of financial position. Now let's complete the second half. First is opening capital. If you go to the question, you can see opening capital 170,000. Profit for the year is based on what we had taken before, 71,730. Let's go back to the question and see if we have any drawings. Yes, we have drawings, 30,000. 170,000 plus 71,730 take away 30,000 should give 211,730. Now let's complete the non-current liability. Bank loan, 7% bank loan. Let's go back to the question and find out the bank loan amount, which is 50,000. We can directly write it in the last column because there aren't anything else to be added. Current liabilities, let's identify the variables. So you can see here trade payable is a current liability. Then you had paid loan interest was 3,500. You paid only 2,800. So the difference should be considered as owing. This is for bank loan interest, which should be 700. So loan interest 700 plus there is an accrued expense electricity of 1,050. These two will go under current liability. So first let me write trade payable and then other payables. So under other payables I have interest, which is bank loan interest owing, which is 700. Electricity owing, which is 1,050. And then you can see there is an accrued provision. In the question back again, you can see there is this accrued provision. This also should go under current liability. Therefore, this should add up to 5,750. And trade payable, which is 29,600. Now, if you add up these two, it should total up to 35,350. Now let's find the total capital and the liabilities. Add 211,730, 50,000 plus 35,350 should be equal to 297,080. In order to check the accuracy, remember your total assets should be equal to the total capital and liabilities, which is 297,080. Now we have completed in the previous session the income statement, which is the statement of profit and loss and other comprehensive income, and the second half is the statement of financial position.